Very good afternoon to all you wonderful traders out there, all you beautiful ladies and you handsome gentlemen. Welcome to our daily live stream. And hang on, PC. Right, I'm back finally. Sorry for the technical. All right, so welcome to today's program, which is brought to you by DCFX Asia. And I'm yours truly, Abe Layman, coming from Central Java, Indonesia, live. Today is Thursday, the 15th of June, mid-month of the middle of the year. So, half year has gone, and much of the scariness has more or less subsided. Thank God. Hallelujah. And we are getting better by the day. We, as in the global economy, are getting better by the day. Yeah, we have some geopolitical situation in Ukraine. Then we have the NATO being capo, and all that. But it's not really a big issue. In general, the citizens of the world would like to have peace because without peace, we cannot prosper. It's as simple as that. So, sure, we may have disagreements. There is the idea of having agreement is to have talks where we negotiate, we meet, and maybe we can find a middle ground where both sides can feel that they have won. So it's a win-win situation, and that's how the world can prosper, and every country in this world are able to develop or grow their economy. No matter how small, a 0.1% is still growth rather than a minus 0.1%, which is shrinking. And that will lead to technical recession as Germany is currently experiencing. But, well, the Germans, they are not to worry about being in a technical recession because they are the major industrial player in the European Union. Well, they control the economy controls about 30% of the European Union. So that's how big they are. And when they go into technical recession, European Union goes along with that. So Federal Reserve, Jerome Powell and his merry men has decided to pause on the rate hike, even though we had two issues last week and early this week with the data telling us that it's not good for the dollar at the moment. But Federal Reserve think that okay, let the market decide, and we'll monitor for the next few weeks, and then for the July meeting, maybe they might want to have a rate hike again. Maybe it's a big maybe, right? Whereas on the other hand, the topic for today, which is the European Central Bank (ECB) and the Bank of Japan interest rates, will be issued. Bank of Japan will be issued tomorrow morning. Time is tentative. Why we did it today? Because well, we start in the afternoon, so if it's tomorrow, then it's too late, right? So we'll discuss about the BOJ later because there's not much to discuss about actually when it comes to BOJ. But European Union is a tricky part, all right? Because technically, Germany is in recession. Well, it's just a status of the economy. The name of the excuse me, is just the current status of the economy. But life still goes on. Yeah, maybe tightening of the belt a bit, or maybe they'll cut down budgets on disposable income, or maybe they cut down on their partying, or they cut down on their boozing. Just that. But other than that, everything is okay. But the problem with Germany is that the rail lines, the trains there are pretty steep in prices compared to other parts of Europe, and that is causing a burden to the consumers because transportation cost is inevitable, it's unavoidable. Not everybody owns cars, and nobody likes to drive 3 4 hours in a stretch. I love to do that, but not many people will love to do that. And driving to work, to be caught in a jam for 2 hours, man. But it's a daily thing, especially when I was in Jakarta. But now it's different. We have no jams around Central Java. So anyway, those were costs that puts a dent in a person's budget. So Germany is having that issue, and that has prompted Christian Lagarde to have a rethink with their interest rates. Okay, so let's see if let's see the numbers of the eurozone first. Then we'll discuss what steps have been done. All right, the euro area has a GDP of $14.5 trillion. Current interest rate is running at 3.75% with an inflation rate of 6.1%, the jobless rate of 6.5% from a population of 342 million people, right? Say if you compare euro area against the United States, the US GDP is 23.3 trillion, almost 10 trillion more. The interest rate of United States currently stands at 5.25%. It has been like that for since 2 months already. Compared to the euro area is only 3.75%. And the fantastic part is the inflation number has gone down to 4.0 against the Eurozone's inflation rate of 6.1%, and a lower jobless rate at 3.7 compared to the euro area of 6.1%, 6.5%. So euro is not looking that good, but nevertheless life goes on. So it's up to the central bank to have fiscal policies that can somehow stabilize the economy. Of course, inflation has to come down. And Jerome Powell and his merry men, the Feds, have proven that by increasing interest rate, inflation rate can come down. Will Christine Lagarde and her fellow members of the ECB would take that step? Because currently they are doing at 3.75% against a 5.25 of the US, and analysts and traders alike feel that a 25 basis points is in the cards. So we can expect the the ECB, to increase interest rates by 25 basis points to make it 4.0. And by then, in a month's time, maybe the inflation rate can come down. Okay, so let's see what time or when will that appear. Let's take a look at the economic calendar. Whoops. So the economic calendar states that today is, hang on, wait, Thursday. Yes. Uh, at 7:15 my time, or 8:15 those at GMT +8, the main refinancing rate and the monetary policy statement will be issued. So, and as we had said earlier, the expected number is at 4.0%. What will the actual number be? Well, we'll find out where Christine Lagarde will issue that and the monetary policy statement. Okay, and then 15 minutes after that, we have the unemployment claims, the weekly initial claims in the US, and then also the retail sales based month on month. Well, it will be a busy night. Then at 7:45, the ECB will hold a press conference, and Christine Lagarde, will tell us what policies they have in place to stabilize the eurozone or the euro area, and of course, especially to stabilize the euro against the dollar. Okay, so it is be a very busy night tonight. Expect the markets to be rocking and rolling, and well, if I were you, or sorry, when I see high impact data, I rather watch to see the reaction. You see, because why? We cannot read the minds of the traders or the people, or the officers who issues the institutions that issue that such numbers, right? Like BLS, Bureau of Labor Statistics in the US, has been known to do window dressing. So those numbers are not really that reliable. But what is really important is the reaction of the market. Sometimes economists, analysts, they have factored in the data much earlier, in the sense that they move the market before the data is released. So when the data is released, it's like a non-event, right? Let's take a look at yesterday. We have a negative number for the PPI, Production Index, right? So his PPI numbers was minus 0.3, which is much lower than the expected number of 0.1. That should send the dollar index lower, right? But did the dollar index went lower? Not really. It was shaking. It went the other way, right? We'll take a look at the technical side of things later, but for now, just to let you know that the data coming in for the euro is that it's going to be a 25 basis points, right? So let's take a look at the news that I can share with you. All right, this is European Central Bank Euro system. That's the headquarters in Frankfurt. So the European Central Bank will almost certainly deliver another interest rate hike on Thursday, pressing ahead with its fight against inflation, even as the Eurozone slides into a recession. They admit it, right? But Morgan Stanley sees ECB ending its rate hike cycle in July at 3.75%. Well, maybe Morgan Stanley may be wrong, because the Germans and the ING and the ECB, they think they need to raise up the rates by 25 basis points to a level of 4.0, which currently is at 3.75. Okay, so that is what they say, that no pause for the rate hike, unlike the Federal Reserve. They really pause, they stop increasing the rate last meeting, which is yesterday, I think, right? So the other day, and today is up to the ECB. Will they do the same as the Federal Reserve? Most people think not. So we expect the uh, ECB will issue another 25 basis points. So, but Econo Day, let's take a look. June ECB meeting preview: recession raises risk of monetary overkill. Well, is it really a monetary overkill? I don't think so, because proven that by increasing rates you can reduce inflation rate, right? Interest rate go up, inflation can come down. That was proven by the Federal Reserve against the US economy. The Europeans think otherwise. They doubt that by increasing rates you can reduce the inflation. They have the belief that not only by reducing rates, but the quantitative tightening is make things difficult to borrow. Make it difficult to borrow, so people will borrow less rather than increasing the rate, which don't seem to work. Yes, they have policies that is difficult to borrow money in the euro area, but the rate remains there and inflation does not go down further. So there is a rethink in the ECB that they might follow the lead of the Federal Reserve, where they will want to move up the interest rate from 3.75 to 4%. Okay, so those are the charts. But future rate hike expectations remain short of pre-banking crisis levels. Yeah, things change over time and market dynamics because the world rotates, planet Earth rotates, people move, day and night changes. So it's not static; it is dynamic, and every minute we have goods and money changes hands. So the economy is still rolling, it's still moving, right? So uh, all these activities will drive or slows down the economy. So if they cannot borrow, it will be difficult to borrow, then they cannot purchase core products or production materials. Then if cannot purchase, that means they cannot produce. Then they cannot, the factory cannot work. Then the laborer got no job. So it's all being stagnant. But if they make it higher, they make it easy to borrow, but with a higher interest rate, it's okay. Uh, Entrepreneurs, they are a fantastic breed of people where they are willing to take the risks because they know what they are doing, in the sense that they know they have a good production line, able factory workers, a good order of products, confirmed order of products, but they need some capital to buy raw materials, right? So they go to the bank, they borrow from the bank. The bank say, hey, the rate is this high. They say it's okay. They have really worked out the numbers that they are pretty comfortable with the interest rate. At the end of the day, the consumers will pay whatever the producers charges, right? Because the producers have to buy materials and borrow money, so the cost of production is double whammy, higher interest rate, and from the production cost, then from also from the raw materials and all that adds up to the selling price, and the selling price is less, from the selling price less whatever cost there is, the profit margin for the producers. So it's a cycle that evolves, right? It revolves and evolves. When you make it bigger, it's like four chefs cooking a cake. Then come four more chefs, so eight chefs will make the cake much bigger so that everybody can have a bigger share. So that's how the economy can grow. Okay? So that is the theory behind economic policies on a macro level, right? So that is the ECB. Next, let's take a look at yen, which quite actually, because Ueda-san, the president of BOJ, Bank of Japan, is happy with how things are running, right? So he's not going to rock the boat. He will maintain rate at minus 0.1%, even though yen has fallen to 7-month low. Traders shift from focus from the BOJ, from the Fed to BOJ. So When you see the dollar index, you see the dollar yen, it's trading at about 140, 140, right? And it can be an interesting note because apparently dollar yen has gone to an overbought positions, right? Today's high is at 141575. Okay, so we'll go into that the technical later. So at the moment, we'll just discuss the fundamental side of things, and this is what I want to share with you. Likely to hold with bond market for his side for now, meaning he just maintain the status quo, let the market moves, and well, frankly, fundamental analysis takes a lot of time because you got to read loads of publications, and then from there you digest it, then you can come up with a solution. But for trader, as a trader, I like to take the shortcut. But knowing the fundamental side, knowing the underlying fundamentals of each and every asset class is good to know, right? At least there you can have an informed decision. But when we trade as traders, I scalp a lot. Yes, I do intraday trade. I don't trade overnight. I don't keep my position for more than one day. Um, well, because I don't like to pay swap. Simple as that. And I want to sleep comfortably with sweet dreams and not waking up with a nightmare. Because when you have an open position and then go to sleep, right? Yes, you may put your stop losses, you may put your target profits, but sometimes things can happen, and I don't like to wake up with a heart attack. Okay, and ladies and gentlemen, uh, I know the way I do things is different from what you are accustomed to. When people talk about economy, talk about money, everything is so serious, so straight. Then come a clown like me likes to have fun, take things on the lighter side, laugh when I hit my stop loss. Why? Well, I tell you what, you know, when I was young in the kindergarten, I remember the absorption rate for a child is much higher than the absorption rate of information for an adult. Why? Because uh, when I read about child psychology, the human mind thinks in pictures. So I like to show a lot of charts, and it has to be colorful. Why? Because it brings out the child in a person, and when that child of that adult is present at the moment, the absorption rate of information is much higher. Of course, you compare the times when you are in elementary school or when you're in kindergarten, and then compare to the time when you're in tertiary institution. See, the type of learning and the type of environment is two totally different. Then you compare which part of your life did you enjoy learning most? Is it when you are a child or when you're an adult? So, well, that's how I do things. That's my style of doing things. I like to take things on the lighter side because now, yes, it is risky. Yes, I don't deny that. You can lose money. Yes, there's no denying. If people tell me I trade without losses, I say it's all of BS. I don't believe in that. Yeah, people can prove to. Well, it just doesn't make sense to me. Anyway, what we're trying to do here is to give you information, try and coach you into trading so you feel comfortable. We do some live trades. You can watch, you see for yourself how I enter markets, how I enter my trade, how I analyze the market before making my decisions. So it's all a sequential thing. Okay, I think I talked too much. Anyway, so let's take a look at the technical side of things. Woohoo! Let's take a look at yen before we go euro. Okay. Oops. Hang on. Okay. What we have here is the yen daily chart, and why did I say it has reached an overbought position? All right. You see, this is the yearly channel. These yellow lines. I'm sure I'm not blocking you. Okay. Right now, it has tested. It poked a bit. Then it comes down, and it is at the monthly high of 140.913, and we have this channel holding it back. So it looks pretty stuck there. Now, I want to grabs your attention, please, ladies and gentlemen. This thing or this pattern is a very rare thing to appear. See, this is a doji. It is also known as a gravestone doji, and it is above the 20 PB top band. This is a very strong bearish reversal. But at the moment, prices is being held back by the monthly Fibo and the weekly Fibo, which is at the peak, plus the yearly channel. Okay, so the bears are in the market. They are waiting for the bogeyman, which is the combination of weekly, monthly Fibo top plus the yearly channel. So these four guys are the bogeyman that is stopping from the dollar yen bears come dancing in the market. So it will take some time before it comes down, right? So that is based on H4. Let's take a look at H1. Right. So if you look at H1, what it's happening is it's gonna go consolidate sideways until the top bands of the 15 and 20 BB turns down. Then they will try and meet somewhere around here before it slides further. Based on H4, it is a bearish thing. Based on H1, let me enlarge this. This is the initial signal. We have a hangman, two hangmen in fact. These two hangmen, one is out of the top band and one is on the top band. And after that, you can see that the gradient got smaller. Excuse me. And now the prices are moving sideways. So it has reached an overbought position, overbought condition, that the only way that it has to go is now. It's not coming down yet. It's waiting for some data to be released before it make its move. So at the moment, it's going sideways. H1 is going sideways. Let's take a look at M15. Well, M15, the candles and the momentum line is telling us that it is a bearish market for the dollar yen. So, but because based on M15, prices have gone below the bottom 20 BBs, so it has to go sideways, get inside the bottom band first, then go sideways, probably meet the mid band of the 15 or 20 BB, then they will start to slide further down. But looking at the trend ribbon, it is beginning to be level. It's going to be flat. It is flat at the moment. It's about to be flat. So gotta wait maybe 2 hours to 3 hours down the line. It may go sideways until tomorrow morning when BOJ will issue the it's a thing anyway. So they have to do that. Whether they change or not, they every month they have to tell the world like, hey, We are still alive, we are still running, but we are not changing anything. That's how it works. Okay, so it's a bit of drama, but well, we need these events to make the industry, to make trading more fun. See, so every month, Federal Reserve will come out with their interest rates. Then ECB will also do the same. BOJ will also do the same. That so when we have this influx of information, it makes the market to be dynamic, and market dynamics are the ones that move its volatility, and the volatility which results in high liquidity. So everything is correlated. It's success is relative. The more successful you are, the more relatives you have. No, I'm just kidding. No, everything is related to each other. So it is a circle that revolves, evolves, and revolves. So that's the industry that we know as FX or OTC markets, and it will never die, for sure. It will stay. It will still be here until the end of the world. Why? As long as humans are called humans, we need to trade, right? So, once you master the skills of trading, you can use that for the rest of your life. I've been doing it for the past 35 years. Anyway, so that's the story of the Japanese, the dollar yen. It is weak. It is bearish, but it's not moving at the moment. Why? Because it's waiting for the BOJ to issue, or it is waiting for the drama from BOJ before it starts to move, right? So that's the dollar yen for you. Next, let's take a look at the euro to see if it's gonna shed some light where it wants to go. Okay, now we have the euro here. Looking at the daily chart of euro, we have a double bottom, and hang on, am I blocking you? Okay, just shift a bit. All right, so this double bottom, this is the height of the double bottom at 1471 points. Move up 1471. Okay, right. The target for euro to go is at 1.0925. 1.0925 is somewhere here. Possible because when Christine Lagarde increases the bank rate from 3.75 to 4.0, it makes more interest. It creates more interest for people to go long, for traders to go long on the euro against the dollar. When they go long, meaning they buy. And but looking at the dollar, the daily chart, it is a tricky thing because it is already at the top band. Because prices at top band usually cannot last that long, but it'll go sideways. It may spike and come down again. For sure, it will go up, but it will come down again. How low will it come down again? Let's take a look at H4. Okay, now H4 has shown an indication that it is doing a pullback. We have the bearish engulfing, and after that we have a piercing pattern at the midpoint, or rather at the mid band of 15 bb, whereas the momentum is still showing us bullishness. It is a bullish momentum running, and looking at this, you see the trend ribbon is getting compressed. It might flip. Sure, it can go up to 109064 for today, but if it is factoring in the other interests of the ECB, well, they might go to 09265. All right, will be around here. This is the target here. Oh, 9265 is here. Oh, right. Okay, not that much difference. Okay, so I'm bullish on euro, but I wouldn't be in the market now. I rather wait because at the moment it is quite confused. It wants to go up, but this is only the second hour of the European session. It has went up based on H1. It has gone up for 4 hours. The bulls have been working for 4 hours. I think the bulls are taking a break. Why? Because this is plus A3 at 08464. Plus A3 is one positive cycle mid level of the high and low. I know it's a mouthful, but there's no other way for me to explain that to you unless we go for the lessons. Anyway, so looking at the trend ribbon, it is bullish. It is bullish trend, and it is a gradual bullish trend. You see, the angle is not so steep, right? It's quite relaxed. Usually, angles like this can last a long time, right? So the target for euro for this year is between 1.15 to 1.20. At the moment, they have yet to reach 1.10. Can they make it? It's already half year, 6 more months to go. Well, we'll see what happens as it progresses. Okay, so there you are. We've covered the euro. We've covered the what to expect when the data is released. We've covered yen, and now it's time to say hello to our viewers. Let me shift this. Okay, let's see who do we have. Go Walker. Hey, Go Walker. Hello. Welcome back. Good to have you. Smith JT. Hey, Smith. How you doing? Good, I hope. Welcome back. Euro. I haven't traded about this. Can talk about this in detail. Well, I've done that. You just done that. Rita Kidrow. Hi, Rita. Welcome back, Rita. Hi, everyone. Yeah, hi to you. Go Walker. I do not enter unless the Europe market is open. Well, uh, I would say that's good because European market open, so we have about 55-60% of the global population of traders in the market. Not too bad. So things may move gradual, not as volatile as where the first session of New York, where we have 99% of the traders in the market, right? So same thing. I don't trade in the morning. I trade only afternoon. Maybe sometimes when Dubai opens, but most of the time is up after 3-4 o'clock. Okay, and uh, well, it's better to trade during the European hours because it's all I call that this is good hours to start. The golden trading hours is when New York opens until New York lunchtime. New York opens is after lunch of the European session. So when the European session ends, it's the lunchtime of New York. So the first session of New York is the second session of the European. So that is where you have 90% or maybe 99% because Asian traders may also watch what the Yankees do. And trade, I only trade afternoon to at night. And I stop my trading by midnight because once the European session is closed, it's up to the Yankees. I'm not in the market anymore. Except yesterday that I have to attend to wait for the data because it's my job to look after. Anyway, well, it's good to trade when the volume of the population is in the market, so you don't have that surprises of spikes and troughs. Okay, next, Rita Kidrol. Hey, Rita, welcome back. Euro CPI numbers are in line. Oh, maybe. Okay, Smith again. How about gold, sir? Okay, let's see gold. Uh, let's see gold. What's happening? Oh, I have a position in gold. Okay, not bad. Floating profit $200. Okay, let's go. All right. See, gold is trying hard to go up, but the bears are trying hard to push it down. From the way from the daily chart, what we are seeing is a three river bottom. That's one bottom, two bottom. This is the third bottom. There is a possibility of reversal, not because I have an open long position, but because this is the low of May, which is at, oh, sorry, I'm blocking you, am I? Ah, my bad. Hang on, let me shift. All right. So, uh this bottom, the low of May is a tough support, which I think it is, unless proven otherwise, maybe later. But at the moment, it is acting it's as a support at 1931.94, right? And it could be a reversal because the dollar index is going the other side. Dollar index is sliding down, the dollar will go up. But it's not, it did an anomaly the other day, so it may not be working like that. So we take a look at a smaller time frame. Looking at H1, what can we see? Sorry, H4. H4, what's happening is a penetration. Sorry. This looks like a bullish engulfing at the weekly channel, and there is a weekly channel cross plus a monthly channel plus a weekly low as well as the monthly low at 1931.94. So we have 3-4 indicators converging on the same level. It should be a top support. All right. So right, okay, so that's gold. It is doing a reversal, but the trend is still bearish. What it's doing is a reversal, and the reversal can mean a new trend emerging. In other words, it is going to be the end of the bearish trend. It will be the beginning of a bullish trend. To confirm, we have to look at the smallest or much smaller time frames, right? But H1, we have a hammer based on the candles. We have a bullish engulfing, but what's interesting is the channel. We have a daily channel and a weekly channel crossing. Currently, prices is being held back by the momentum line and the weekly channel line. I think it can go. All right. There is H1. Let's take a look at M15. Okay. M15 can be tricky. Why? Because prices may be a bit shy to go up. Why shy? Because there is the 15 BB top band waiting to be tested, right? And the weekly channel plus the daily Fibo plus the 15 BB top band is waiting to resist. Can it hold? We have to watch the markets. Let's take a look at M5. Ah, no wonder lah. Okay. See, this is the M5. And M5 shows that the trend ribbon is currently getting compressed. Okay. Now, what it's doing is it is going along the MA75 as a support. Then this MA75 and 100 plus 125 will get smaller, then it flip. When it flip, that is the initial bull trend happening. If you look at momentum, this is the momentum line. It crosses the 15 BB and it crosses the 20 BB. Now it's moving away from both the big and 20 mid band. That shows that the is in the market. Okay, so this is my buying price at this level. I bought earlier. I got out earlier also scalping. 15 minutes job, make about $150. Now I'm up by 250. Okay lah, not that bad, not that bad. I haven't put in my target profit yet. I take a look at. I prefer to use the M15 to have a clearer picture. And when I see crosses like that, I usually use that as a gauge for my targets. Okay, so I'll put in my TP around here, and I will leave my SL level here. I'm pretty comfortable because my buying price is where we have major support, which is at this level, 1932. Okay, and again, ladies and gentlemen, I give you some ideas. Whether you want to trade or not, it's your choice. You decide. Okay, whatever levels that I give is based on my analysis, based on the system that I developed over the years. If you find it useful, you can try, but the risk is all yours. Okay, so well, that's it. That's for gold. I hope I answer your request. Is it Smith? Yeah. How about gold? Okay, Smith, there you are. My trade on gold. Lisaya. Hey Lisaya, welcome back. I entered two positions, one profit, one loss, both sell. Hmm. Uh okay. Well, you did earlier, I guess, because now it's going up. Well, for scalpers, yeah, you still can trade. Small movements, yes, you can make. All right, but don't worry, Lisaya. So one profit, one loss, it's okay. Both done, right? Take a break, have some coffee, uh, just relax a bit, 10, 15 minutes, then you feel comfortable, then you trade again. Don't force yourself. Just basically, we have to enjoy to do it. If you have a burden, then that's not nice, right? So keep it up, Isaiah. Just trade, trade, trade. No, whatever the results, if it is profit, good. If it's not, then okay. That's always the next trade. Okay? Next, Aurel Pen. Hey Aurel, welcome back, Aurel. May I sell in 1934? Wow. You want to sell at 1934? Hmm. Okay, you sell at 1934 where you want to get out. You can get out at 1930, about $4. If the regular account becomes $400, the mini account is $40. That's your potential, right? But if you look at the trend ribbon, yes, it is a downtrend. Yesterday, I did a counter trade actually, and I made some money. It was supposed to be going up, but I was selling. Sometimes we make, sometimes we don't. I was lucky yesterday, and today maybe I may be lucky and maybe not. Well, we'll just see. Because if you want to sell, I wouldn't stop you. You can sell if when your analysis says that the price that gold is coming down, and you are confident that gold is coming down, then you should sell. Uh, an ideal price to sell would be at 1935 because that is where the trend ribbon is, and that if I will sell, I want to sell at the MA100, or when the MA100 and the top band are together. Okay, based on M5. M15, I think it's a bit too late to sell because it's already going sideways. You may want to look at M1 when you want to enter the market. Okay, see, M1 is being resisted or being supported by the trend ribbon, right? And the trend ribbon is showing that the bulls may be in the market. Yes, it can be confusing. So it's time related. You have to know which time frame you're using, what strategy you want to use. You plan when you want to enter the market and when you want to get out the market, right? I decided to go long because I saw this. Let me enlarge this, then you can see better. This is a trade setup. This was earlier. It went up, I liquidated, it came down, and this is when I put a limit order because we were about to go live, and I don't have the time to watch this at the moment. So I put in a limit order with my stop loss position. While I was speaking to you, my order was done, and it is having some floating profits. And why I want to go long, because the low is higher than the previous low. This is trade setups. See, somebody did ask what's the difference between chart setup and trade setup. Chart setup is you update the indicators on a daily, weekly, monthly, and yearly basis. When you set the charts, you wait for trade setups. Trade setups are patterns formed by the candles and the indicators that will tell us where the market is going, right? When I see a doji like this, and then I see a dragonfly, then I see a support at this level, this looks like a potential reversal, because previously there was a reversal based on support and Bollinger Band. So that is why I entered a buy here, excuse me, and I got my profit within 15-20 minutes, and that's it, done. One trade is done. And while waiting to go online, I entered again at the support levels. I did a limit buy because the price was doing around here on the way down. So I did, sorry, it was doing here. Then I do a limit buy, managed to get it. And at the same time, I put in my stop loss level. So uh, stop loss is your insurance policy, because without stop loss, and if you just have an open position with no stop losses, the risk factor can be huge. So capital preservation is numero uno, is number one. We want to make money. Of course, everybody wants to make money, but the risk, because of the risk factor, when you have stop losses, you limit your losses. I can lose $200-300 per trade, but I can make $300-500 in another trade. So the trade off is there. I always go for a bigger profit, but I always have a fixed amount of stop losses, because if I were to lose, I'll lose $200-300. That's it for one trade. And if in one day, if I have 3 straight losses, that's it. I won't be trading for that day. I'll take a break for a day. I can take a break for a week. Sometimes I take a break for a month. So don't force yourself. You don't feel good. You don't feel comfortable, or you say you're heartbroken. Don't trade. Angry, don't trade. Happy, trade. Having fun, trade. Because when you feel good, when your moods are good, your brain work very well. People get creative when they are happy, and you can see creative people are happy people. So that's why I always say I encourage all of us to be not to worry, just be happy, stay healthy. Okay, so while we were talking, gold has responded by going by telling us that it is going bullish. Of course, Going to 125, MA 100 may take some time. We want to go sideways, but I have confidence in my system, and I think my trade is pretty comfortable. I'm pretty comfortable. So let's see who we have next. So our pen, to answer your question, may I sell in 1934? The, that answer must come from you. You must analyze the market. I give you some ideas, then you decide whether is it good to sell or is it good to buy. Gold Walker, nothing special is happening. This is pure price action taking control here. Chill, guys. Yeah, agree with you, man. Price action, well, it's market dynamics. Anyway, whatever it is, Gold Walker, I want to try more product. Well, if you enjoy the volatility of gold, you will love the volatility of DAX, DAX. Man, you can make good money there. But the risk is pretty high. Number one, it has a higher margin. It's more expensive, about 400 bucks. If you go on a mini, about $4,000 if you go on a regular account. You can make 1 grand, 2 grand, 3 grand, maybe 5 grand a month. Sorry, a day. Uh, and you can also lose that same amount. But it is volatile, and it's more for advanced traders. People who love to scalp will love the DAX. Well, let's compare. Gold, let's say we give a level of 5. DAX, we have from 9 to 10 or 1 to 10. Let's say gold is at 5. DAX is at 8 or 9. Right? So you want to try Gold Walker? Take a look at DAX. Try demo first. All right? Until you feel comfortable. So Mr. PR, hey Mr. PR, welcome back. Sterling Yen put SL at 179,500, TP at 70,500. Thank me later. Thank you for telling us your trade signals. It can be interesting. Let's take a look at Sterling Yen and see what's happening in Sterling Yen. You said that put SL at 79,500. Hang on. SL 179,500. Then your TP at 70,500. Yeah, sure. Sterling Yen will work like dollar yen because they are waiting for the impetus before they slide. Sure. Uh, I won't thank you later. I'll thank you, Mr. PR. Thanks for the signal. It is interesting, and we are about the same level, but going to up to 70, I think is too ambitious. Maybe next week it can reach that level, right? So who do we have next from Mr. Pia? Okay, Mr. Pia, 179 to 7 range market may be up 779. Well, it is what it's doing is doing a pullback. It'll be resting around here 78,470 for a while. Looking at the Bollinger Band, it's turning south, it's turning down. There is a monthly channel cross at 79,009. So that will be tough. Well, H4, you have bullish engulfing, but when I see the dollar yen, there was that gravestone doji. That is pretty scary. Well, anyway, I think I've run out of time. What else? New. Hello. Rita Kirdao says if you choose buy at price lower, it will be comfortable for us and your account. Of course. Yeah. Kin Duan. Hi. Hi, Kin Duan. Nini also said, I don't have good trade today, sir. It's okay. Don't worry. Today, bad day, can always come back tomorrow. Alright? Don't worry about losing. If you cannot accept losing, then my advice is don't trade. If you feel bad about losing, you will not feel good when you win. So trade is a trade between profit and loss is inseparable. Okay, so you just have to accept it and work from there. So, well, ladies and gentlemen, time for me to go. I've been notified that I have to go. Ladies and gentlemen, thank you for your time. See you again tomorrow. This is Abe Layman signing off. Don't worry, be happy, stay healthy, trade wisely. Gotta go. God bless. Bye bye, everyone. Have a good one.